when the pandemic began, and we're closing in on a year, I guess now. We're almost there. Did you, at that point, were you optimistic about how you could manage through it? And what I mean is, I think it's benefited because so many people were at home that they're watching, the great content on Discovery. But then I wonder about how you produce anything and how difficult it is for a lot of content providers to work in this environment. Did you know that you were going to have a 70% gain in your stock?
Well, we always felt that we were a great global IP company and that we own more content than everyone else. And we've been readying now for the last 3 years to offer our content direct to consumer. And we were being valued as a cable and free-to-air company that was outperforming the market, but we weren't being valued as a global IP company. And so when the pandemic started, we were really advantaged in 2 ways. We were able to produce content for food, for home. We produced content. We had Mike Rowe shooting stuff in his living room. And what's interesting is that we produced over 1,500 hours of content, and it was almost like comfort food. We have an average of 12 channels everywhere in the world, and people started, because we were producing, people were coming to home and to food and to Discovery. And so we really had that advantage. But the big advantage for us is that we've been readying for the last 3 or 4 years for Discovery Plus. So, what we were doing during that year is producing more content because we launched with 55 original series. And we wanted to really drive this product into the market as a truly differentiated product. One, we're global, and the only other global companies are Disney and Netflix. But 2, everybody else is doing scripted series and scripted movies. And that's what people spend 50% of their time watching over the last 30 years. But we have most of everything else. And our bet was, when people get a streaming service, they're not going to just want scripted series and scripted movies. And so what we are proving out, we now have over 11 million subscribers, but by the end of this week, we'll have 12 million paying subscribers. And so we are really in the game. We're in the global game. And what we've learned so far is people are paying for our product. They love it. They're spending more than 2 times the amount of time they spend on cable watching our product. We got a great demo, and we're a fantastic value. At $4.99 ad light and $6.99, we're able to reach both cord cutters and people that have cable that want to watch with less commercials or with no commercials. And so basically we're off to a great start. And we just got to keep doing what we're doing and keep making Discovery Plus better. But we couldn't be happier.
Did you had some, I guess some people were saying, what's taking so long? But there's a difference between, because a lot of other people entered the streaming market before that. But I think all along, you said you want to do it right. Now, where were you supposed to be in terms of internal projections by the end of February? 12's above what you were projecting.
Right. It's been less than 60 days. The product's in the market. We're way ahead of expectations. We're way ahead of all of our expectations. But most importantly, the question is the product really good? Are people buying it, and do they love it? Yes, we're off to a fantastic start in terms of scale, and it looks like we have a real game here. But what really encourages me is that people are spending hours with the product. And, within the last 60 days, those millions of people that are watching, they've watched 93% of the 55,000 hours we have. So we have all this great documentary content, natural history, science, food, home, Oprah, crime. And it's a great environment for people to hang out in and a great value. And so, we're seeing more than 30% of what we're getting in the marketplace now. Doesn't have to do with the marketing. It's word of mouth. If you go on social media, people, they love the product. And so it's very, very encouraging. And it's great to be in this game because this gives us real opportunity for sustainable long-term growth. We have an outperforming traditional media company that's been and continues to be a free cash flow machine where we outperform globally. But now we have this direct-to-consumer product that's growing with real subscriber fees. Our ad light product, we're already making more per sub than we're making on cable. And so when you put these two together, it's really a great balance, but it gives us an opportunity for sustainable growth, and we're just getting started.
Shepard Smith here. Thanks for watching CNBC on YouTube.